All right, guys, what's going on? Today we will be going over our order blocks. And basically, what our order block is our last up or down candle before the opposite move, right? So we're following our previous bootcamp videos, right? So first, we're looking for structure, right? Then we're going to draw our fib. Then we're going to identify our optimal trading zone, and then we're going to look for this order block or OB candle that's inside this zone, right? So just to walk y'all through what this will look like, right? This is real time. Right now, as we can see, not getting a clear move in one way or the other. So at this time, I would not be looking for a trade. I have to look for something a little bit more obvious, right? Because again, like in a trade like this, okay, cool, we're clearly in an uptrend, right? So I would look for structure or look for entry um, somewhere in here, right? But again, let's just go over where we would find an order block or how to show y'all how to mark this up. Okay, this is good right here. So structure, right? We broke structure. Let's just mark it out for y'all, right? This is our lower high, lower low, lower high, lower low, lower high, lower low, right? Lower high. This is where we break structure, right? So knowing that we break structure to the upside, right now we can look for a position right after our break of structure. So what we do is we'll take our fib, draw it from the previous low, right? I have 2 or more candle closes. This is my valid low. 2 or more candle closes, valid high. Take it from this low. You're going to drag to this high, right? Boom. So now I'm identifying my zone. My zone is 618 to the 886. I'll go ahead and highlight that purple. Let's clear this out now that we identify structure. All right, so let's go ahead and look at our zone here. Boom. Oh, where's my rectangle tool? My rectangle tool. There we go. All right, 618 to the 886, right? Preferably the 702. That's why it's highlighted red. As y'all can see, price went up, pulled back right after the break of structure that we marked up. We marked up our zone, and what do we find in our zone? Our OB candle right here. And this candle would be the last down candle before the up move, right? For buys, it's going to be the last down candle. Let me change this color. Let me change this zone so it can be a clear difference. Boom, boom, boom. All right, so this candle right here. Let's make this purple too. All right, so this is trade zone, right? And this block. Right, our order block or our OB candle, right? If we're looking for buys, right? Because again, structure just broke to the upside, meaning we're looking for buys, right? If structure broke to the downside, we would look for sales. But since we broke to the upside, all right, I know I'm in buys, right? I know that Oh, excuse me. I know that once this retrace, right, it should come back down to my premium prices, right, my discounted prices, right. And so for this, in our third confirmation, right, now we're looking for our order block. Now our order block has to close within our optimal trading zone, right? So even with this bottom piece hanging out, right, as long as this closes in this zone, right, this order block is valid for entry, right? Now, the reason why these order blocks are so important is because these are areas in which price rejects from, right? So a lot of times when you're going to look at these markups, this is the magnet for the retracement, right? Before it goes off and continues to make lower lows and lower highs, this is what it reacts off of, this order block, right? Now, does it have to? No, not every time does it have to come and touch, right? That's why our 702 is highlighted red, because you can see a lot of times with this OB candle valid, right, it'll come back to the 702 and then take off, which it did, right? Now, understanding risk, right? This is where I'm gonna mix in risk management with OB candles so I can show y'all the difference, right? So if we were currently in a live trade, right, this is what we would do, right? I would put a pending order, limit by 1, right on top of this wick, right? Again, we have our candles and our wick, right? You put your pending order on this wick, right? So what happens is once the market comes back and taps you in, right, then you'll have your take profit and your stop loss, and I can show y'all that in real time later on this video what that would look like. But right, typically what you want is you want a fib level to match up with this OB candle, right? So you would want this, like in this scenario, right? If this wick matched up with the 786, right? That's what you want. You want this order block to align with the fib level that's in the optimal trading zone, right? You don't want it at the 618, right? That's and for risk, and it's really for your risk, right? So this is how you would calculate what you are risking every trade, because you are leveraging money, right? You're leveraging a percentage of this account to gain a percentage, or to gain profits, right? So look, if I were to place my pending order on top of this wick right here, this order block, right, I would only be risking 23 pips. Now, each pip is worth $10, so that's essentially I'm risking $230 on one contract, right, for a profit gain of $2,081. Guys, this is the power of the strategy. Right after the break of structure too, right? We've been bullish on our higher time frames, right? Aligning with structure on our higher time frames, we can hold this trade. That's a confirmation. Boom. Right? Holding this trade, holding this trade, holding this trade. Right? Let's go back. So this one entry, right? You could have traded this and been good for the week, right? That's the power of the strategy, right? And this is only with 3 confirmations. There are additional confirmations that help. And let's also talk about this optimal trading zone here, right? So I want y'all to peep the times, right? At the time that this candle touches the 702, it's 6 o'clock, right? Now, optimal trading zone aligns also with your optimal trading entry, right? So what does that mean? These prices like to retrace within a certain time frame, right? That time frame is the last 15 minutes of the top of the hour and the first 15 minutes of the top of the hour. So for example, right, our optimal trading time entry would be between 5:45 and 6:15. As you can see, it perfectly touched this 702 line at 6 a.m. right? Now again, that time confirmation is an additional confirmation. It doesn't have to every time, but you want to have that entry come right in that 30-minute window, right? That is an additional confirmation for your trade. After your break of structure, right? You're looking at your higher time frames to see if we're bullish, which we were, right? Now I'm looking for buys. I'm identifying my optimal trading zone. When I drew my fib, I highlighted my order block to see if it's in the zone. It closed within the zone, right? I have my pending right here. I analyzed my risk, right? I was risking in this trade $230 to make X amount of money. Now for this trade in particular, it would have missed me, which is okay. You didn't do anything wrong. It's just the difference in risk, right? So let's say I move my pending order up to the 702, right, which is perfectly okay, right? Being that this is a preferred discounted price for the banks to drive, this is a preferred price that banks like to catch a discount at, right? So with this at this 702 level, right, my wick of my OB candle is not touching it. However, this also increases your risk, right? So instead, you're risking $410, which is still fine, right, to still gain the plus 1,000 plus 2,000. It's just a matter of risk, right? Are you more comfortable with risking $230, or are you more comfortable with risking 410? The gain is still there. The power of the strategy is still there. It's just understanding that these wicks sometimes, like these OB candle wicks, they don't always come up to the 702, to the 786, right? 9 times out of 10, though, they might fall somewhere in between, right? In this case, it's right under the 786, right? Just having that order block is a protection for you, right? That is the least amount of money that you will have to risk, right? Because understanding structure, right? If this order block is the last down candle before the up move, let's say instead of this, let's say it didn't respect this candle and it just continued to drive through the price. We know that if this is our last valid low and it breaks this low, that means what? It's breaking structure, right? So being that this order block is so close to my low, I can put my stop loss here, because if it doesn't respect it, then I know that this chart is either gonna make equal lows, which is consolidation and we don't want to trade in, or it's gonna break structures to the downside, right? So this protects you from losing crazy amounts of money, because again, we're trading in $1 trillion market. If you don't have a stop loss, you can just lose until you blow your account, or blow, if you're trading with your real money, just blow your money right there, right? We have stop losses in order to protect us, and when you draw your fib, your stop loss is always at the 1, right? And I'm gonna get into a trade later on to show you guys everything I'm talking about. A setup might not be clear, but just for the purpose of you guys seeing that stop loss, limit buy, pending order, all that, right? But again, dealing with these order blocks, right? Very, very, very powerful, right? These are magnets that the banks like to react off of. Like the market likes to react off of these order blocks, right? And as you can see, it never comes back, right? Even we can even look, right? The market never came back. So essentially, you could have held this trade. Not even joking. You could have held this trade. I know it's a negative, but this one entry, I mean, that's 9 grand. It's crazy. That would be a swing trade, right? If you hold your trades for longer periods of time, but it still just shows you the power of just one entry. All you need is one entry, right? And that's what we've been getting into more, is understanding that you don't have to trade every day, right? If you can catch a move just like this, you are good. You are overly good, right? But again, we'll get more to what that looks like. We have more confirmations, but let's just keep going over examples, right? Let's look at a sell example, right? And what that would look like. Let's see. I think it was sales earlier today. Was this clean? No, I think it was not. Let's see what time. Okay, right here. So, right here, again, let's just identify a trend. Start right here. That is our lower high. Shoot. I'll even say lower low right here. That's fine. Lower high. Lower low. That's a high. Honestly, yeah, but this is a high all the way through here. Right? Low. High. We broke structure to the upside. However, there were no entries. Right? So now, if we keep following our rules, boom. This ain't that clean, to be honest with you. This isn't that clean. Nope. No entries here. See, like, no entries here. It looked like it at first, but nope. You want structure to be super duper clean. Let's see. Boom, 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 boom. Let's find some sales. Look for sales. Look for sales. No, I don't like it. We were still bullish. Okay. Yep. Definitely might be something in here. Oh, this is perfect. Right. Clearly in a downtrend, y'all can see. Wouldn't even have to mark that up. Let's look right here, right? Lower high, lower low. Cool. Draw my fib. Identify my IC, right? We know structure is going down. Identify my IC. My IC candle, my IC candle. Boom. Right, last up candle before the down move. For my sales, see, it's in my zone. Let's go ahead and highlight that as well. Right? My two candles closes. I just want to show y'all, to be clear, this is a valid high, right? So this is my lower high. This is my lower low. I have two candle closes here, two candles closes here. Cool, right? price after it wicks down. Price comes up, right? My pending order would be, oh, never mind, I don't even have to do that. I'll just show y'all. Right, my pending order would be right here. Stop sell. Boom. After it came down, would have tapped me in. Stop loss at the 1. Never came back, right? At this point, I'd be risking 22 pips. Now for NAS is half that, right? It's $5 per pip, right? So instead of it being what is that, 220, it'd be 110, right? I'd be risking $110 on one contract to potentially make, man, this joint just fell at this guy, right? Even then, never came back. This one entry was crazy, right? Yeah, it came back days later, but you should have been took your profit by now. So that's what, 815. So that's 8,000. If that's $10. So what, you're looking at $4,000 off this one trade, this one entry, right? It's just the power of the strategy. And all you need is one good trade. One good trade, right? So again, and this is just with 3 confirmations. There's more confirmations, right? We just want to identify what our OB candle would look like if we were looking for sales, or what our OB candle would look like if we were looking for buys, right? Now again, what time did this take place? 11 o'clock, right? And mind you, I'm just clicking and looking, right? We call this back testing. Back testing is just looking at the move already made to boost your confidence of the strategy. You need to see it, right, for yourself. You need to go back and look, right? Draw your fib and look at these entries, right? It took place right in between the last 15 minutes and the first 15 minutes at the top of the hour, right? So this would be between 10:45 and 11:15. Made that move. It initially touched this IC candle right here, right? This would be the first candle where you would get tapped in. 11:57, perfect. I'm in my window. Falls to the ground. Exactly what you want, right? So again, I'm gonna kind of show what this looks like in real time, to see if I can find an entry. Let's see. Hey. Cool. 1 hour bullish. Nah, this is a little yucky. Let's click up. Okay, this could potentially be something. Right. OB candles in that zone. Right, I place my pendant. Let me buy 1. Right on top. Right, hold on. Right, and we will see. However, it's 2:30, so I'm not in that time. Right, it might, hopefully, it can tap me in. Otherwise, I'll just kind of show you guys what it would look like if it was tapped in. Boom, 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 boom. Let's see if gold has something. That way, we're not just sitting. Okay, gold could potentially. Okay, gold is really bullish on our higher time frames. So I can't even say that the sales is what is preferred. I would be looking for the sales, the buys to align with my higher time frame. But we do have some type of structure here. So just to show y'all, right? We have our IC 702. Right, I put my pendant right here. Limit sell 1. Please come back and tap me in. Just so I can show y'all an example of this. Please come and tap it, tap it, tap it, tap it, tap it. Okay, let me I just wanted to tap me in so y'all can see what it looks like. Yo, there we go. So it's gonna tap you in like that. You can put some stop loss right there. Here, take profit. Right, a 1-to-1 is pretty good. 64. Right, a 1-to-1 is pretty good. This trade already did what's that? 22 pips from the entry. So this is why you don't want to jump into trades late, right? You would have already been up $220, right? If you would have had it on a 702, it didn't come all the way back and touch this IC. But again, I just wanted to show you guys what it would look like in real time. As you can see right here, this is how much money you'd be gaining or losing in the market after it taps you in, right? So again, your stop loss is always at the 1 because of this IC or this last high. If it blows through it, then of course it wouldn't be valid, right? So this is what it would look like. Trades, you're really technically supposed to hold trades anywhere between 5 minutes and an hour. Like I said, if you had that one entry, just ride it out, right? That's why you go through so much to get your confirmations and trade, how you're supposed to trade. Well, let's see. Did it touch the IC? No. It might have already touched it in this case. Let's just see what it do. Go back to Nas. See if she come back. This would be the proper way to enter the trade, right? Right on top of the IC. Boom. Waiting for it to come back. Right. As you can see, gold is playing. It's respecting it. Respecting that 702, right? You would have already been now $260 in profit, right? So again, this is a winning trade, right? You can go break even to secure your profits, right? Because you can only predict the market up until a certain point, right? We want these moves to be crazy, crazy moves, but as long as it tests what we're doing, right, we've won the trade, right? But yeah, hopefully she respects this. I want her to respect it on the 3-minute shoot. Technically speaking, she's about to break structure to the upside because it's our candle close and she closed above. So this could honestly retrace back to this IC and go the other way. And the reason why
is because our higher time frame, we are bullish. So the buys are more favorable than the sales is. Even though our lower time frame is showing sell structure, this is what we would call a sell down to the buy. Right? So on the 3-minute, I'd probably sell down to here. And then go the other way. That's what I would think will happen. Again, while we're here, I might as well show y'all what break even is. So break even is this button right here. If you see it's highlighted, you can only break even if you're in profit. Right? So what that does is that takes your stop loss all the way up here. So now your trade becomes risk free. I wanted to get me in profit again so I can show y'all what that would be, or what that would look like. Hopefully it don't reverse on me right here. Oh man. Yeah. Sheesh. Yep. Right here, technically that's a valid low. Right? Broke structure, made a low. Now we should be making a new high. Which means this aligns more with our higher time frames. Or it could reject off of this. Man, we have a lot of structure within structure right now. So I would not be, again, it's not clear. I have different time frames showing me different things, right? We know our higher time frame trumps all. So let's see. This is our last low, valid low. 2 candle closes right here. So we would read this from low, high. I can say low, high, low, high, low, high. And it did not reject. It did not. It might. This is what will determine what happens with this trade. If it rejects this order block, right? Cookies, right? Trade is gonna reverse. If it respects this 15-minute one, this trade is gonna play out. This is tricky because technically on the 1 hour, it's making that second candle, which would be our valid low, and it has time to do so. We have 20 minutes left before this candle finishes, right? Because it's 2:39. But we'll see. We'll see. I do want y'all to see like what happens in real time. But yeah, let's see what this Nash trade doing. The Nash just made a new low, so it probably is not going to come back. Yeah. Oh, somebody respect it. Somebody respect it. Man. Nope. It ain't looking too good. But again, I just wanted to show you guys what it looks like to get tapped into your pendant. Show you what happens in real time, right? And this is how you would close the trade, right? Just click on that X, boom, right? This is how much in this scenario we would have lost
lost $143. Right now, I didn't let that move play out, right? Also because of time, right? These trades can take a while, right? As long as it doesn't come to that one, you're still in that trade, because again, in examples, right, it can play around and then shoot down. But again, we have 3 minutes until this candle closes, right? And then we'll be getting into our optimal trading time. But yeah, that's just what it looks like. Yeah. So, all right, guys. Yep, that wraps up the OB candle, right? And just seeing what that candle would do, understand the power of these moves. And yeah, we'll see you guys in the next video.